Hello and welcome to BloombergQuint. My guest today on IPO Adda is Ravi Kant Jaipuria, Chairman of Devyani International Limited, the brand owners for KFC, Pizza Hut, and Costa Coffee in India. Mr. Jaipuria, thank you very much for joining us on BloombergQuint.
Thank
Let
you.
me start. Let me start with the kind of disruption that we saw in the last 1 year. You are in the QSR business. How did you see the entire business focus shift, or maybe the model itself shift in the last 1 year?
So I think what has happened during the pandemic is the delivery model has shifted from dine-in, and as our delivery use model used to be about 50%, which has shifted to about 70% now, and dine-in has reduced from the balance to 30%. So that's where the major change is happening, and what that has made us do is restructure and going forward restructure our store sizes. We have reduced our sizes of KFC from 2,500 to 3,500 square feet. Now it is 1,500 to 1,800 square feet. So all our new stores are downsized and they are right sized now, which works for us. And from Pizza Hut, which used to be 2,000 to 3,000 square feet, which we have brought down from 550 square feet to about 1,000 square feet. So those are the major changes which have happened. But even after reducing the sizes, the store sales have not come down and it's remained at the same level. So per square foot, the value of is gone up much drastically.
So do you see this trend to continue, or once we come out of lockdown, once all are vaccinated, people start going back to malls and shopping resumes? Do you see this trend to continue?
So in KFC, we think the delivery model will come down, and I think it's the dining model which will again become about 60% would become dine-in and 40% would go to delivery, instead of 60% being delivery today and 40% being dine-in. But whereas in Pizza Hut, we still believe that our 90% delivery model will continue, and I think that is not going to change.
And what about the coffee thing?
The coffee is actually, both. It's basically very little takeaway. People come and carry it with them. That's a different thing. But people come and sit and drink coffee, and some of them in offices and all they take away also. But
So it's going to remain the way it is. Coffee won't change much. It's basically
now a lot of offices are not even open, so it's very difficult to really analyze. What is going on. The airports are shut. Flights are not going. So everything in a coffee segment is very wishy-washy at the moment. But I think as the pandemic is slowly, things are opening up. I think coffee is going to be a great business going forward.
No, what one thing which you saw in the last financial year for you was that you had done a lot of restructuring of your stores, uh, closing down on 61 stores permanently as well, exiting some of the airports which you have done. Uh, do you think that you will go back to the airports when things normalize?
No, we will not go to the airports the way we had taken concessions for full airports. We'll take specific locations now for our specific brands what work for us. So we are not going to take full concessions anymore.
Okay, so that's a change in model which you're doing
Yes,
now. Yes.
absolutely.
Because you have exited the Bombay airport as well, right? That was a big one.
No, we are still there. In Bombay, we are still there. The model has slightly changed, but we are still there in Delhi and Bombay.
Okay. I was looking at the entire way the Kinta QSR is working out. Uh, you yourself said that the models have changed because you need now smaller stores coming in, and that's giving you much revenue per square feet as well. Do you see that being the trend for the entire industry as well, or is it just for you?
Well, I think it should be for the industry. Basically, there is a shift from just straight dining to home delivery, and people have got used to having calling for food at home. So that shift is going to be there. Now, obviously, it's going to shift back partly to dine-in, which is what I said. It will become reverse. Now, today, KFC is 60% delivery, which will shift back to 40%.
Hmm.
So there will be a shift, but I think delivery will remain a permanent feature.
Mm-hmm. I'm looking at your IPO, and there's a fresh issue for 40 crores and offer for sale of roughly around the remaining amount which is there, and it's roughly around 1300 1400 crores which is coming in. Um, what is the plan for the fresh issuance which you plan to do?
So we are basically going to repay our debt with the money which is going to come in, and the company will become practically debt free. And going forward, we don't believe that the cash flows will be enough to go for our expansion, and we will not further need to dilute.
Okay, and what kind of interest savings that would entail once you pay off your debt?
So obviously the interest and interest payments will come down, and the business model has changed, and the margins have improved drastically over the last couple of years. And going forward, also it clearly shows that the margins are going to be healthy,
Hmm.
and
Uh,
obviously the interest burden will come down, will not be there. So
okay, so you will turn profitable sooner in that sense.
well, we are profitable now also at store level.
Operating level, you
Yeah,
are profitable,
yeah.
but on a net level.
Well, our margins will definitely improve. So going forward, it looks good.
Okay. I just want a clarification from you. I was looking at the RHP, and you had made a preferential allotment to RJ Corp and to Yum India. I think the agreement happened in 2019, but the share capital history shows that the allotment happened in fiscal 2021 at 43.3 rupees per share. And you're pricing your IPO at 90 odd rupees. Um, can you justify the jump in premium there?
I think this the financial people will be more justified to give you an answer. I am not. I can't answer you this. I'm not very sure of this. So
Okay, so what about the fact that can you clarify that did the allotment happen in FY21 because the agreement was in 2019 if I'm not wrong.
well, I think it was done as the company needed some funds, and we put in at that point. That was the valuation which was done for even Yum, the
Hmm.
parent company which came in. So we valued it at that and put in the money.
Okay. You have a franchisee, non-exclusive franchisee for all of India except some captive markets. In the last few years, you have acquired some of the KFC units from Yum, if I'm not mistaken. Do you
That's right.
foresee acquiring further stores from Yum India in the next coming years?
Well, they don't have that many stores left. There's only 20 stores left with Yum in Hyderabad, and that territory is already with us. So they are not going to open any further stores. And they
Hmm.
have kept these stores for experimental and new innovations and all. So whenever Yum decides, I guess we'll be ready to take those stores.
Okay. There is also a revised development agreement with Yum India, which has been entered into. Uh, it though it mentions what is the continuing fees and other marketing fees which you have to pay as part of your revenue. It doesn't mention what is the kind of store expansion strategy is there and what you have to meet on a year to year basis starting 2022. Can you
Well,
elaborate on that?
all development agreements of Yum have that, and in the last 25 years we have never defaulted. So we've been able to open actually more than the number of stores we agree with Yum, and we feel that there's no change going forward also.
Is there you can give us a number? What is the target for FY22
No,
and
I
23?
no, I don't think we can give you numbers.
But will you be eventually giving numbers once you're listed? Yeah, I can understand the RHP restrictions which is there, but
Well, whatever is in the DRP we can give, but anything beyond that, I don't think I can mention.
okay. On a strategy for international markets, you are in Nepal and Nigeria. Will you be able to? Are you looking to expand further there? What kind of strategy you are adopting for these markets?
So we are slowly expanding in both the markets, but there is no plan to further send funds from here. So whatever the generation will be in each of the countries, we'll be expanding with that money.
Okay. And in the other brands which you have, like Vango and others, what is the key strategy there to expand that segment?
So Wango works in specific locations, and we have identified those locations, and we will be expanding Wango in those specific locations, which are basically airports, your food courts, and hospitals. So certain locations, Wango works very well, and it has done extremely well for us, and we'll be expanding in those territories.
Okay. In the core brands, if I look at the performance of your core brands, which is there, KFC has shown a good growth there, but there has been some sluggish growth, which for Pizza Hut. Why is that?
Well, as I told you, our original model was dine-in, and we've been transforming from that to delivery model. And if you look at in the last 2, 3 years, we have completely transformed, and we've become a 90% delivery model. And in that period, we are now growing at a pace which both the brands are growing actually.
Hmm.
So it's not that Pizza Hut is lagging behind.
No, I'm not talking about lagging then, but the growth rates are not showing up there. That's the reason I asked you.
No, if you look at the quarter four numbers, I mean, our growth has been, the SSSG growth has been as good as the industry.
Hmm. Okay. So you're saying that that's a normalized growth rate which Pizza Hut is growing at.
Well, that's what we hope. I mean, we can't be sure, but that's what we hope. So the Pizza Hut is also growing. I mean, what percentage exactly it will grow is very difficult to say, but we
Hmm.
are seeing reasonable growth in Pizza Hut
Hmm.
also.
Mr. Jaipuria, you also, wear a lot of other hats from other economic industries point of view. I just wanted to get your feel on how are we moving as the country is moving out of lockdowns, and we have seen 2 lockdowns already. How are you seeing various businesses moving? You have some minority interest in hotels, you have in other sectors as well. How are you seeing that the economy opening up and the kind of demand that is getting generated?
Well, our main interest is in soft drinks, and that is rebounding back, and its market is coming back. Obviously, home consumption has gone up drastically from what it used to be on the go market, because as the railway stations, bus stations, tourist locations, these are still, hotels are still reasonably not open. So
Hmm.
there is a gap in that, but that is more than being covered by the home segment. So our soft drink business is back to normal, and we are quite happy with what is happening in that.
And what about the demand part of it? You're seeing more demand coming from the
Well,
Kirana.
the rural is growing, so rural demand is there, and the home demand is there. So that is more than making up for the shortfall of the Guru market.
And what about the trade channels? In the sense, are you seeing e-commerce playing a bigger role for your demand now?
No, e-commerce is playing a bigger role, but I think for shopping still, the e-commerce is still not that big for us.
Okay. And how do you see this market growing? I mean, overall, this market growing going forward? Do you
So
see
market is looking.
see the demand going back to pre-COVID levels?
I think it's already back to pretty well close to the pre-COVID level.
Okay. And from your perspective, because you have multiple hats, are you seeing industry being able to cope with lockdowns and shutdowns, or local lockdowns much better now as compared to in say in the first lockdown when we saw in April, June?
So obviously, people have understood what the issues are, how to resolve them, how to work around it. But obviously, lockdowns are a problem for industry, and there's nothing that you can do. It's something which is a pandemic, and you have to be careful also health wise. So we have to work with the government, with the people, and but we are finding that the demand is coming back. So I don't think, as long as we are careful and we don't have a major third wave, we are okay.
This, Coming back to the IPO, do you see enough cash being generated by the business to help you help you in the store expansion policy going forward in next few years?
I didn't get your question. Sorry.
I'm trying to say that the cash generation from your existing business, is it sufficient enough to give you free cash to expand your stores?
Yeah, so our expansion plan, what we have done, we are quite comfortable with our own cash flows, which we can expand with it. So we don't need to further dilute or borrow for our expansion plans, what we have done.
And what kind of changes that has happened to your leasing of assets policy? We saw that there has been some renegotiations that happened in the last financial year. So from that point of view, if you can give us an idea of how your lease costs have gone down and how going forward, what kind of policy you're following there?
So I think going forward, it is a sort of what you say, a buyer's market to a point. So our leases are much better. The terms are much more favorable to us. We can get prime locations, which at one point were difficult to get. And a lot of our stores which we are signing are revenue basis instead of fixed rentals. So it is looking quite positive going forward at the moment.
Is it possible for you to give us an idea of what is the kind of revenue linkage that is there to the lease?
Well, it's different brands,
On an
different.
average, and in a range, if you can give us.
So it's about 10 to 11% at the moment.
10 to 11% of your revenues as revenue share with
of the net
developer.
revenues.
Net revenues, okay. And that should help you in cost optimization as well, right? Basically, there's
No, absolutely. So we expect our rentals to hopefully slowly come down slightly going forward.
Okay. Mr. Jaipuria, it's been a pleasure talking to you today. All the best for your IPO.
Thank you.
The Devyani International IPO launching on August 4th and priced at the upper band of 90 rupees per share. Thank you very much for watching.
Thank you very much. Thank you.